with that capital now from the government and the cleanliness that we have on the cap table, it sees us right through on a very accelerated program, like extremely accelerated,
That's
right through
crazy.
to the geological model, the feasibility study, the permitting, right through to the final investment decision. So it's all just coming together so nicely, and it
Yeah.
encourages other capital to come to the table.
Good day, everybody, and welcome to Betweenplays Stock Market Strategies. Today we have with us John Pasalacqua of First Phosphate. John, how you doing?
Yeah, I'm great, Albert. Always great to be on.
Yeah, your stock is just doing phenomenal. I mean, before we get into the questions, uh, I know you're from Toronto, but we're the last Canadian team, so I think you've allowed me to wear the cap because we're the last Canadian team.
Listen,
I don't want you getting butchered in Toronto. You know what I
listen,
mean?
listen. I'm a bit old-fashioned. I'm still a Nordiques fan. I'm waiting for them to come back. But,
Wow,
but in the meantime, I'm going to support the Habs, no problem. Ce sont les
wow.
habitants de Montréal, so that's okay. That's my people
That
too.
Listen,
Yeah.
that's a great response because if we ever got the Nordiques back, that would be
But
beautiful.
yeah, we're bringing the Nordiques back.
Uh, that would be beautiful. But again, once to your stock, I mean, when we first initially started doing this, I mean, it was pre-IPO, and you were like, it was at 30 cents, I believe it was when we first got on, and now you're at 128 as before I saw it at 9:30 in the morning. Just incredible the stuff that you've done with this company, and of course, naturally, your shareholders must be ecstatic. And for everybody out there, yes, I do hold shares of First Phosphate.
Great.
So, John, let's get into the questions. Right, you had news this morning. You had a lot of news, and we haven't had you on for a while. My fault for not reaching out, of course. But listen, let's talk about what you got this morning. So, you recently announced over 3 million from warrant exercises and highlighted a streamlined capitalization table. How should investors think about dilution going forward, especially with the most remaining instruments held by insiders?
Yeah, so look, first let's talk about that, right? Like the warrants were at a buck 25, right? The stock was around a dollar 25, and 3 million warrants came in. I was shocked. So it just goes to show you the quality of the shareholders here and how they want to see the company well capitalized. They want to be addedly exposed to the company. We asked some of those um, um, exercising shareholders, why are they exercising? They said, you've executed, right? We love the company and we want to have more of the company. We want the company to have a good, good cash position to be able to move forward. But I'm like, yeah, look, we've already got 20 million in the bank. They're like, no problem. We just want you to have more.
Yeah.
So I really feel like blessed as a CEO, like, to have that kind of vote of confidence. So I think first thing we have to look at is this is an extreme vote of confidence for the company. Existing shareholders coming out, it's not like these warrants are big in the money, but they just wanted to exercise and to be extra long the stock. So that's the most important thing. And this was done at $1.25. 3 million shares came, $3 million worth of stock. So that sets a nice new peg for the stock, right? The round before that had been in December. That had been at 90 cents. I think we
Yeah.
brought in about 10 million there. And then before that, the rounds were, 50, 35, things like that. So this is a nice new peg for the stocks, a nice vote of confidence. And yes, we are now pretty much set with what we have in the bank, which as of the last quarter was about 20 million. There's been some expenses since then, and there's been this warrant money, so we're around the same level. Plus a $16.7 million contribution from Natural Resources Canada. So we're pretty much clean until, final investment decision here. This gets us through our feasibility study. It gets us through our permitting. And pretty much gets us to the end where we're building the capital stack. So you're not looking at a lot of dilution from here. The other really nice thing about the cap table now, Albert, is that all the warrants are gone. The only warrants that are remaining is about 2.6 million warrants, and they're in the hands of 3 people on the board. All the options are in the hands of staff, management, and board, and all the RSUs are in the hands of staff, management, and board. So all of the dilutables are in the hands of those people that are basically with the company, and if they execute those warrants, if they exercise those warrants or options and get those RSUs, it's only for the betterment of the company and the fact that they're staying longer with the company. So everything's clean. All the stock. There's no more hold stock in the company. There's no more, like I said, any of these dilutables. It's just common shares for everybody who's holding them, and then just common shares and small dilutables for the management board and staff. So it's in an amazing shape, like to get to this point in the company where we have clean line of sight not only through feasibility, but permitting and FID. Yes, we have to get there and we have to execute properly, and it's about a year and a half away, but we can hit all those milestones without having to raise another penny of capital. Like, what other company in the junior space do you know that it's kind of set up this way? There might be a few, but I don't think it's many. So
Oh,
really thankful to our shareholders, thankful to the Canadian government for that, great contribution that they gave us, which was non-dilutable and also non-refundable.
yeah. So I'm going to ask you a few questions, and those questions, you might have touched up a little bit on them, but of course, naturally, we'll be expanding on them through the questions here. Now, you were saying about the 20 million, right, that you have in cash, roughly 20 million, but very, very close. It's like, and but you have a little bit of debt, but I mean, the debt is pretty insignificant. So how should the shares, like the debt's like $5,000? So, you
Oh, it
know,
might have been a credit card at the end of the year. You have to see if there's any
might have
credit
been
cards
a
outstanding. So,
credit card.
yeah,
Yeah, you
yeah,
went and bought
it's just
some.
nothing.
It's
You just think there's no debt in the company, right? That's what's
exactly.
clear. There's no debt. There's no
That's right.
dilutables. There's no hold stock coming out.
That's right.
And we got over 20 million in the bank now, right? So it's
Exactly.
it's in such a great position.
Yeah, it was like paying for gas for your car to go from. That's how insignificant it was.
Right.
Just mentioning it because we had it there on Yahoo Finance, so I just wanted to put it out there. So we're always clean on what we have over here. So yeah, it was like pretty much paying for a trip to pretty much go. I probably went to, I don't know, maybe went to the Rick with that.
Yeah, right.
So, anyways, since June 2022, you've raised approximately 62.5 million through non-brokered financings. All right, what has been the strategic advantage of keeping these financing management led rather than brokered? Yeah,
Well, one of the good things is we get to pick and choose the investors. Sometimes if you go through, investment bank, they load up the book however they want, and you could get toxic capital in there. So we've been able to know 100% of all the people coming in. I would say I know, just not to be ridiculous, I'll say 99.9, but let's
wow,
say 100% of the people that are in the book. Um,
that's
Everyone
crazy.
who's I know them all. I know them
That's
all.
nuts. That's
Myself or
nuts.
my staff, we know them all.
Yeah,
So it's all good capital. It's not toxic capital. A lot of times, even raising the capital on your own like this, I mean, we've paid a minimal amount of commissions on this because a lot of the capital just came in direct to us. But most importantly, we were able to go into some really deep pools of capital, like family offices, friends and family, people that otherwise you can't access through the brokers or through the institutional channels because they simply aren't there.
okay.
So we've been able to build a really nice capital stack. We can make calls anytime. We can get in touch with our shareholders, like you see with this warrant exercise, $3 million on in the last 2 days.
Yeah,
We can make phone calls and people just say, yeah, okay, we'll do it, done.
that's
So
crazy.
we got it. We got all of our investors on speed dial if we need them, which is
Yeah,
really important.
that's good.
Of course, there's a float in the market. Some have sold, some have come in from other channels. Like, you don't know everybody, right? But
Yeah,
the main shareholders that have come in, that 62.5 million. We have spoken to all of them, every single one of them.
that's amazing. That's really crazy. And if we head off into the government of Canada, you secured a 16.7 million non-repayable contribution from the government of Canada. So how materially does this de-risk the project compared to, let's say, traditional equity financings?
Yeah, and the other thing is it's non-dilutable, right? So it's a total contribution.
Wow.
Yeah, so I mean that's $16.7 million that you didn't have to go out and market, 16.7 that you didn't have to go out and pay commissions on, and it's constructive capital. It's capital that wants you to succeed. Obviously, the government gives you this because they see, you know, the necessity for it, and they want you to succeed. Unlike some other pools of capital that might not want you to see you succeed. And want to steal the asset from you. So we've
Yeah.
got, like I said, clean shareholders. We've got the government behind us. Everything's clean. The
Yeah.
cap table is clean. The dilutables are in the hands of the management staff and the board. So everything's clean, clean, clean. This is really important for people to realize. Like, anytime you make an investment in a junior cap company, right? Like, always have a look at the cap table, right? And by no fault of anybody's, like, a lot of times they get pretty messy, right? Because there's been a lot of financings and this and that. But with that capital now from the government and the cleanliness that we have on the cap table, it sees us right through on a very accelerated program, like extremely accelerated,
That's
right
crazy.
through to the geological model, the feasibility study, the permitting, right through to the final investment decision. So it's all just coming together so nicely, and it encourages. And I know what your next question is coming up. It
Yeah.
encourages other capital to come to the table, other sovereigns to come to the table.
Like the LOI from Denmark, so to speak, for 170 million euro, not even Canadian euro.
Yeah, exactly. Within a month of having the funding from the Canadian government, the Danish Export Credit Agency came to the table for 170 million euros for anything that we need for the mine, whether it be equipment or services. And you saw there was also a nice little quote in there where they said, "Hey, we're looking forward to doing this. We want to see you successful. We want this partnership with Europe." And the reason for that is if you look at the funding that we received from the federal government, it was under the Global Partnerships Program. So you
Okay.
need to have another government together at the table. And we had, the government of Belgium and the European Union at the table for that 16.7 million. You saw the ambassador of Belgium and the ambassador in critical minerals to the EU in Belgium was at the table as well when we signed. And this is why it gave great confidence to the Export Credit Agency of Denmark to become involved as well.
That's crazy.
So this is one sovereign lines up another, and
Yeah.
this is the thing, and this is what I want to stress to a lot of people. One pool of good clean capital lines up another pool of good clean capital lines another pool of good clean capital, and if I may, even to the junior companies out there, keep your caps tables clean. You get bad capital, you're not going to line up a good capital on top of bad capital. So it was really important for us to do what we did to raise this 62.5 million over 3 years on our own to fight the good fight, have all shareholders that we knew, all good local Canadian, mostly U.S. and some European shareholders, no foreign entities of concern in our cap table. We lined that all up nicely. Then the government of Canada sees that, they come and they line up, and then the governments of Belgium and European Union line up. The IFO, the Danish credit agency lines up, and who else knows who's next. But it's all built on a good club. Like good
You,
people like to stick with good people. So it's really important to have good, clean capital structures out there, and that's the proudest thing that I am of this company.
that's really cool that you're talking about non-toxic capital. I actually wrote that down versus good capital. And you know what? I don't want to touch up too much, to define that in this episode. I'd love to have you back to actually talk about that because I think that in itself can make for even a great 20 minutes on what this means exactly. But bringing it up like that, people should be paying attention to that. So between government grants, export credit backing, offtake funding, so are you intentionally building a financing stack and to minimize equity dilution? What does the ideal capital structure look like basically at production?
Yeah, no, good question. I mean, yes, look, one thing we've done well at this company is we're always able to see the next steps. So even though
Yeah.
we're on this step, we're looking forward to the next step. Doesn't mean we're skipping ahead of this step and not doing it properly, but you got to do both. You got the step that you're at, you have to do it properly, but you have to be looking forward to the next step. So we're looking forward now, getting the Danish credit agency on board. We also got the Export Import Bank of the United States at the table. Building that capital stack slowly so that you're not into a dilutive state once you come to final investment decision, right? You can line up all the debt, but you're lining up the debt from from nation states. It's nation states that are there to see you successful because they know that Canada, that the EU needs this, these critical minerals, right? They need the
Yeah.
phosphate, they need the purified phosphoric acid.
Big
So
time.
having those really good capital stacks at the table where they give even interest-free loans or they give interest at a favorable rate, that's what you need to make these projects really profitable and very successful. That's what we're doing. We're lining it up so that at the end you're not stuck and you're kind of just picking up whatever's left on the table. We're being selective and we're asking the best of the best to select us, and we're starting early so that they have the time to run all of their numbers.
That's crazy. You're talking about critical minerals, then you're talking about like non-toxic capital versus good capital. You're bringing up like a whole bunch of other stuff that's going to be great segments for different shows. That is for sure. Now, John, so let's get to the drilling a little bit here. Your latest infill drilling confirms long intervals over 50 meters with grades above 10% and continuity across multiple zones. How does that change the scale potential of the Bégin Lamarche project here in Quebec, which is, of course, tier one, right?
Yeah. So look, I mean, first of all, I want to be really real about it. So the reason that we entertained the second set of drilling, we had done about 35,000 meters of drilling on the project.
Okay.
So now we were going out to do another 30,000. We ended up doing 40. But
That's right.
the real ambition behind that project was to do the infill drilling, right? Usually when you go out, you'll drill at 100, 200 centimeters and you're just trying to find the resource. So we had found the resource. We knew it was there, PA was successful, but now you're kind of infilling to make sure that there's continuity, right, to the resource, and that's what we did. We've proven up that there is continuity. It means that it's not just spotty, but it can make a resource. So that has been done. We're comfortable with that. Now the next step is we have to put all that into an updated mineral resource estimate. That mineral resource estimate, right now I can't comment on it,
Okay.
but obviously the continuity has been established. There's been a couple of new zones that we found. We found a couple of new intersections at depth. So we're comfortable, right? Like we went out to prove that what was there is really there and it's continuous, and anything more than that is a bonus. So I think investors should be looking for really to make sure that the continuity is all there and that we're able to successfully move what were inferred and indicated resources
Yeah.
up to indicated and measured, because you cannot move into a feasibility in the next stages of mining unless you're sitting at indicated and measured. So that was a real purpose of this extra drilling. We're comfortable with what has been attained, and now we'll wait to see what the new mineral resource estimate tells us.
That's really crazy, John. Since the very beginning, you've set out what your plan was for this company. I remember, and people can go to your website and they can see it. Your steps, what you want this company to, become, and that lines us up for the next question. The First Phosphate's position itself as a vertically integrated mine to battery LFP supply chain. So, but you stated this since day one. Where do you position yourself along that chain, and what are the biggest execution risks remaining?
Yeah, so no, thank you for that, Albert. Like I think a company must be focused, and you must remain true to your focus, and that's exactly what we did. Like you said, we've been signaling that since the very beginning, right? And so
Yes.
here are the batteries, right? We've even created batteries using the critical minerals just in North America. The first LFP batteries in
There you
25
go.
years created in North America using North American critical minerals, and you've got the
Mm.
phosphate and the iron from the Bégin Lamarche project from First Phosphate,
Yeah,
and we have another great Quebec company in here. We've got Nouveau Monde Graphite.
that's right.
Graphite de Nouveau Monde Graphite is in here
Yeah,
as well,
well known.
as well as lithium from a North American source in the
Yeah.
U.S. and an American company that put it together. So yes, we've stuck true to that. Now you're asking about the stages, right? And where's the risk? So there's three stages to the company. There's the mining project, which is, in my opinion, the most important, the upstream. You know, the most stable business for the company. Why? Because it's very rare. You can't find this igneous phosphate anywhere else in North America other than
Correct.
in Saguenay-Lac-Saint-Jean, as far as we know. So that's really important. That's the
Yes.
value driver of the company. But then
Yes.
obviously the company wants to get downstream, right? All of these projects, they want to get downstream. So getting downstream into making phosphoric acid, that's going to happen with our partners in Belgium, Preon. They're giving us the technology to do that. They practically invented the technology in the 1950s on how to do it.
Wow.
So that makes us our own client of some of the mine stock, and it also puts us into a business that's very steady, has got a great IRR, and it's something that once you've got it up and going, it's like a machine, and it goes for the next 50 years. So that's a really important piece of the business as well. Now the next stage, which is making the guts, the battery, the cathode active material that goes into these batteries,
Yes.
we've got the technology to do that as well. I will admit that gets a little bit trickier. There's a lot of technological changes in there. It can become a compressed margin business with the Chinese rivalries that are out there, and China's obviously got scale and they're able to do it a lot cheaper, and it's kind of based on tariffs and that. But two out of the three pillars are definitely in place. The third is coming as well. But definitely it goes, in terms of, interest in the company, it's really the upstream, the mine is the most interesting. Second is into the phosphoric acid. And third gets into the LFP cathode active material. And after that, you pass it on to, those who put it into the batteries.
Yeah.
So that's kind of where we line up in terms of, our three pillars and our strategic interest in all three.
That's pretty crazy. I mean, when you're looking at the whole energy storage, critical minerals, you pretty much called this from day one. So you're with the igneous rock as well. The more that we learn about Quebec, James Bay area, and this is basically my two last questions. When the more I look at rock, just rock, like when people are finding minerals in rock, whether it's scandium, titanium, yourself igneous, phosphoric acid, okay, rock. When we look at all of these and we compare them to like sand and titanium, or we're looking at for lithium like salt brines and all kinds of rock seems to stand out above everything else. Whoops. That's good for the show. There you go. You see,
That
it's
sounds
not
like a
all
rock.
rehearsed. No, I'm joking. It's not rehearsed at all, actually. So, how would you position yourself on that?
I hope that rock didn't fall on your foot, Albert. But
No, it
anyways,
was my heavy between plays pen. It just got stuck on the side. Maybe what happened to poor Vasilevsky last night when he tried to put out his blocker instead of
yeah.
like hugging the post. But anyways, yeah. So,
So
Jesus.
look, the hard rock, at least in phosphate, is really important. It's different in lithium, but in the hard rock, or you could call it the soft rock, right? It's a igneous anorthosite. It's pretty brittle actually.
Okay.
The phosphate that's found in there is kind of been trapped in that lava rock for millions of years, and it wasn't able to settle. It just got trapped in the rock and it stayed there, right? Just boom.
Okay.
Whereas the phosphate that comes from sedimentary deposits, right? Sedimentary deposits meaning sediments, it's
Yes.
sort of accumulated at the bottom of like old swamps and old seabeds and old lakes. And
Okay.
it's accumulated with a lot of other stuff, and that's where a lot of cadmium, uranium, thorium, mercury, zinc, lead, whatever else it is accumulated in these deposits.
So a lot of deleterious material, basically, a lot of like extra junk.
Correct.
Okay.
And so that phosphate is still phosphate, but it's got a lot of baggage associated with it. Let's say, right? So they purify that one time, and then they if there's the highest purity stuff, they can skim it off the top and they can make the battery grade acid for it. But only 10-20% in general they can take of that without a massive waste stream. And then the rest, the big 80-90% goes all into the fertilizer industry, goes on to crop fields, because it just gets recycled in the earth. So it's not
Okay.
that bad for that purpose. But
Okay.
the point is they cannot make the high purity phosphoric acid alone out of the sedimentary deposits. And when they're in the sedimentary deposits, they're primarily fertilizer producers, and many of those companies don't even go up to purified phosphoric acid.
Wow.
So with the igneous rock, almost 100% of it goes into making high grade purified phosphoric acid for batteries,
Well,
and
it's a massive difference.
you don't have to touch the fertilizer. So yeah, it's like the opposite, right?
It's a massive difference because
Yeah,
just the cost ratio alone is completely different here now.
correct,
Oh, that's insane.
correct.
Okay. Well, so
Yeah,
if we look at it that way, all right, this is my last question to you because I think it's a pretty good segment. If we look at the next 24 months ahead, what's the single milestone that would fundamentally, basically, re-rate First Phosphate in the eyes of the market, and resource size, feasibility study, financing, offtake, execution, or anything of that nature? Of course, naturally, what you're allowed to tell us. You can always give
yeah.
us hints. No, don't do that. We'll both get in trouble.
Yeah, I mean, look, companies have their milestones, right? And then things happen to companies in between those milestones, either good, bad, ugly, or great, right?
Yeah.
So in terms of our set milestones, our next ones that are publicly out there in the market is, we're moving to an updated mineral resource estimate, right?
Yes.
And a new geological model. Now that we've done all the extra drilling, then the board of directors would need to look at that, and if they feel comfortable, which it looks like they probably will, we'll decide to move into a feasibility study. If that feasibility study is triggered, we've already got everyone in place and to do it on the inside and on the outside of the corporation. We would be setting a timeline of December of 2026, an extremely tight, aggressive timeline to get that feasibility study done. Now,
Wow.
why so tight? Well, we believe that these critical minerals are worth more the quicker that they're brought to market, because the need is now, right?
Oh, big
And we're
time.
and we're behind, right? So
Yeah, yeah.
so that's why we're moving quick. We're moving as quick as we can, and that's why we raised over 30 million last year. Thankfully, the government saw that, gave us the non-repayable, non-dilutive contribution, and now we're fully financed to get through that process. So we'd have to really kick it really hard, get through that feasibility study, align permitting in early 2027, le BAP au Québec, as you know,
Yeah.
the Bureau des audiences publiques sur l'environnement.
Okay.
Get that one out of the way, and then after that, we would be moving into getting permitting and capital stack. So I think you've got to look at the mineral resource estimate. I think that's already sort of maybe kind of discounted in the market, but that will be out to confirm that in the next 3 to 4 weeks. And then the feasibility study, I think, is another big milestone, end of December of 2026. Then permitting, early to mid next year, building the capital stack, by mid to end of 2027,
Yep.
and then starting to build a mine in 2028 and having an operating mine in 2029, which has already got definitive bankable and prepaid offtake on it for about 30 to 35% of the mining stock, and then the other 50% we're using ourselves in the downstream on the phosphoric acid plant. So it's pretty nice, pretty tight project. It's good small to medium size project. It checks all the boxes. It's got good local social acceptability. And it just keeps getting more and more traction with other governments, with off-takers, with strategics. So I should be looking for all of that stuff out there. But the main milestones are those. It's the geological model, the feasibility study, and the permitting.
It's crazy, John. I can't believe everything that you've accomplished in such a short amount of time. I mean, I don't know if you sleep, because you're like in Germany, you're here, you're there, and sometimes like, look, you're building something from scratch, and you're all around the world. So I know your phone could be ringing at 2 a.m. if you're getting a call from, let's say, someone in Australia. You could be getting calls from all over the world, which means there is no time. I don't know how you're doing it. Incredible, everything that you've done, everything that you've stated since day one, and we're really proud to have you on Betweenplays. Thank you so much for being here, and I would really love to get into this whole non-toxic capital versus good capital. I mean, this would make for a great show, but next time, please.
Yeah, no, sure, that's great, Albert, and thanks for the compliments on myself as a CEO. But please realize there's a big, great team together with me, and it's not just one person; it's a lot of people, and we've got an amazing team. I think we've got about 20, 30 people on the inside, the outside, and with outside consultants, probably about 50. It's just a great team of individuals and great professionals that work with. We pick the best of the corporate culture. People got to fit into the corporate culture, and we take people that are extremely professional and extremely humble. And it's working really well.
Well, that's exactly what a great leader would say. So, you know what? On that note, John, thank you so much. I'm telling you, once again, a lot of people out there are looking at your stock really closely. And if anyone isn't looking at the stock naturally, they're missing out on something that is just an incredible story. So thank you, John, and I'll see you back again. And thank you for not saying anything about the Canadiens cap. I know you're in Toronto, so you might but we're the only Canadian team left. So everybody must forgive you for allowing me to still wear the cap.
Vive les habitants de Montréal.
Vive les habitants. All right, see you, John. Thank you.
Bye. Thanks,
Bye.
Albert.
Bye.
Bye.
Betweenplays. It's the journey and what you do between where you are and where you want to be. Research, prepare, plan, and execute your strategy. Do your DD and stay strong in visualizing and achieving your goals. Our strategy is unique since 2020. An original concept imitated, never duplicated. Real conversations with media influencers, educational and expert speakers, analysts and consultants. Betweenplays, bridging the gap between companies and investors.